All right, let's take a look at crude, okay? Let's take a look at crude. All right, yesterday on crude, we had a big trend day on crude yesterday, right? Here was our entry. Broke out of high value area. I sent the charts out to everybody. Broke outside of high value. First retracement. J signal nailed the low. All right, there was our entry. Big trend day in crude. Held our line in the sand pretty much all the way up. So that was a $2,000 trade potential. A $2,000 trade potential right there just off that trade on that big move up. Over $2,000 trade potential actually into the close. It almost turned into a $3,000 trade potential with very limited risk. That's what you do on trend days. If you break out a high value, you look for the first J signal retracement. High value was right here. We broke out of it. High value was right there yesterday. We broke out. You look for the first buy retracement, nailed the low, and got us that big trend day. But what do you do the next day? If you come from a trend day where you're hard trending up all day, right? Trend, pull back, because in trend days, take a pullback buy. You had several pullback buys. 1, 2, 3, 4. 4 big pullback buys, 5, 6 pullback buys during the session from 40, right around 46.60 all the way into the close of just under 49.50. So almost a $3,000 move per one contract. It all started off with breaking high value area right here. High value broke. A rule of thumb is market profile set the trade up, take the first retracement, J signal long, nailed it. Well, what do you do after a trend day? Because typically you trend 3 and you chop 2. You go into what's called a wedge, okay? So there's trend. That's what trend looks like. Very easy. You break out a high value, right? High value be red. Break out a high value there. Look for the first retracement long. And then we got the J signal long here, right? That's what the J signal long looked like right there. Broke out a high value, retested high value, take the first J signal. There's a long. She shot up. What do you do after that? Well, the market goes into what's called a symmetrical wedge or what's called a chopper range. The best way to look at it, you'll notice these moving averages are totally flat as a pancake. Your trend filter, I put the trend filter the same as the moving averages here on the black chart. They're flat as a pancake. So when they're flat as a pancake, the rule of thumb is you're allowed to sell the high and buy the low of market profile. Buy the low, so it's been doing this morning so far. Buy the low of LVA with the pull-in bar and sell the high of HVA with the pull-in bar. That's a rule of thumb in a flat market. Buy the low LVA, sell the high HVA. Then what's going to happen is that you're going to form what's called a wedge. A symmetrical wedge are in flat markets. They typically almost always happen in flatter range markets after a trend day. You'll see these moving averages flat as a pancake since 4 o'clock this morning. So what do? Sell the high, buy the low, sell the high. Came off of LV again. So here's a second test that Jeff took. Jeff, you should have got your first target out on that one. Nice trade. But now we're going to look for a break retest. Now we're looking for a break of the symmetrical wedge. So these are number 1 trades. You're allowed to buy the low, sell the high off the first test of profile with the pull-in bar in a flat market. It's called a number 1 trade. Then what we're going to do is we're going to look for a breakout of those highs or lows and look for a continuation trade, a number 3. And that's what you're going to do all this year, all next year, all the next year after that. It's been working for 30 years, the same exact rhythm. It's either going to be a number 1 or number 3. And what happens in flat markets, typically it goes from a number 1 right into a 3. You buy the low, sell the high. Came off the low again here on market profile. Coming off the low there off of volume profile and our Ninja Trader profile. So it's ready for a break. Okay? Sell the high, buy the low. So you can see in a flat market, it's been selling the high up here too off of profile. Bought the low off profile earlier. It's been in a range market. and going in between profiles. And that's what it does in range markets. It likes to go from profile to profile. So then what it does after it bounces between profiles, and you get these flat magenta MAs, what we're going to do is, these are number one trades, right? These are number one trades off these lows and highs. These are number ones. Because we're trying to catch a V-bottom, V-top off profile in a flatter range market. Then what we're going to do is we're going to look for a breakout of these levels. Right? Now, Symmetrical wedge is 2 higher lows and 2 lower highs. One's a symmetrical wedge. So if I take the distance from this wedge, the high and the low, and I put it from there from 70 all the way down to 20, I got a $500 trade coming up. And the break retest here or a break retest here on a symmetrical wedge. You can measure the distance between the highest high, lowest low from the profiles with a wedge. And that lets me know if I break out a high this morning, I retest, my first target is $500 per one contract. I mean, that's the overall target, I'm sorry, from the symmetrical wedge, or the downside is $500. All right? So it's very, very clear what you do. And this is how profile has been working since 1985. All right? The 5 sim is a really good way to look for the wedges. Randy, 5 sim. So what we're going to do is this. Here's what you got to learn. You're going to go from trend days, right? Trend days are break retest. Now the 3 on the 3 break retest also, Randy, is for profile. If it breaks profile and you get in the 3 sim, you got to take the 3 sim. But you're not allowed to take the 3 sim unless profile is broken, retested, right? The 3 sim, you're going to see more break retest than the 5. The 5 is a longer term time frame. But if the 5 breaks retest like it did yesterday, see the 5 yesterday, what it did? It broke yesterday and it landed right on my profile, didn't it? It broke out and landed right on our high value area. This is a very easy entry to see yesterday before that big $3,000 potential move up. Right there's your exact bar entry. Right there. Break high value. It's a simple ABC long. Break out a high value. Retest high value. An ABC long right there, or 1, 2, 3 pattern long. That's why it's called a number 3 pattern. When you break out a profile and you retest, it's called a number 3. There's only 2 setups in this trade room to learn, a number 1 and number 3. If you do J signal as a standalone indicator, it's a number 3, so you got to learn right there. Whether you do the 5 or 3, let profile break, retest, there's your entry. So that's trend, right? So trend, you can see what happens with trend. That's trend. Break high value. Remember, market profile sets my trade up. How you trade J signal is market profile sets a trade up by breaking outside or inside a profile, and then you take the first J signal retracement. That got that low for that big explosion to the upside. What happens, markets don't go straight up and straight down. They go from trend to chop, chop to trend. So then you come into what's called a symmetrical wedge in a range or flat market. And the easy way to see it is this. If you notice the moving average spread here, it doesn't take the smartest bear in the wood to realize that is trend. Look at the spread between your trend filter. Look at the spread. Not only that, look at the angle. Look at the angle on the moving average. Look at that angle. If it's 35, 45 degree angle up, all we're going to do on J signal is take retracements, 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 retracements. With the ATR chart up there to the upper left, confluing with J signal trades. That's the best way to do it. Spread equals bread. Right there's your spread on trend days. And all you're going to do is take retracement trades off profiles on the black charts and off J signal retracements when profile's broken. Very simple, not hard. It's been working 30 years the same way. So when that spread, that's trend. Look at that. That's how you see trend. It's the most important trend filter right here is just moving average, just longer term. Look at the angle. You should never short against that since you broke out a high value area. There is no short from here, 46.60, all the way up to 49.30. If you shorted that one time, you were wrong. You're not allowed to short that, right? You're not allowed to short that since you broke out a high value area. Only take retracements. Then what happens is you go into a range market. And if you know this, you can really predict where you're going to buy and sell. So once you come from a hard trend day, you're expecting a range the next day, then you can just buy and sell with the pulling bar, the highs and lows of these profiles. And what's going to happen, we have unemployment, we have crude oil inventories today at 10:30. That's probably going to break us out of the range. It's done it. We've been on fire with this thing, with crude oil inventories, with the number 3 pattern. I expect the same thing today on getting another trade potential if this thing consolidates inside this wedge. If it doesn't consolidate inside the wedge and breaks out, we'll look for number 3 right away before inventories come out. But now we're going to anticipate this. It's very simple. Once you come from number 1, you're going to look for a breakout. Old resistance becomes new support. You look for number 3 pattern right off here. That's how we catch these big number 3s. They'll look just like that. So now that's how number 1 and number 3 looks like. The number 3 will now play off the number 1 high or low off profiles. That's typically how the 3s react. They'll take out the highs, then they'll retest the highs, then they'll get cranked. Down here, you'll see this has been working for 30 years the same way. You break profile here, you retest, and then you look for a number 3 pattern off where the number 1s were. That's how you trade the number 1, number 3. It's either going to be every day. It doesn't matter if you trade this or the S&P 500, the Dow Minis, NASDAQ futures, Russell 2000. Got a couple trades on the Russell this morning. It just doesn't matter what you trade. It's the same exact setup right here. The 1 will turn into a 3, and that's all you got to learn. And that's how you trade CHOP. That's exactly how you trade CHOP. Buy the low of LVA, sell the high of HVA, and then wait for a breakout of LV and HVA. Look for the retest. Look for a J signal short. Vice versa, look for a J signal long HVA. Versus trend, very easy, not hard. You break out a high value, you look for the first J signal retracement. Break out a low value, look for the first J signal retracement, or do it off the black charts over here.